Matt, the mortgage guy. In today's video, I'm going to talk about, are we in a housing recession? More importantly than answering that question is, what does that mean for you? What does that mean for home prices? If you're in the market to buy or sell a home, stay tuned. 2022, 2023 are going to be interesting years. Are they 2008? Are they 2018? What is it most closely going to mirror when it comes to home prices, affordability, and all the other stuff? Stay tuned. All right, Matt, the mortgage guy, residential mortgage broker. Before we get started, if you're in the market to buy in 2022 or 2023, you need to do two things. Connect with a great agent. Go to homeandmoney.com/Matt. Get yourself pre-approved with a great broker. Greatmortgagebroker.com. Fill out the form. Me and my team will be in touch. So with that out of the way, I want to get into this very interesting conversation that I'm hearing a lot of about being in a housing recession. Because the answer to that question, are we in a housing recession, is yes, we are in a housing recession. But what does that mean? Because as a home buyer, whether we're in a housing recession or not, you want to know, are home prices going down? Are they staying flat? Are they going up? Are homes going to be more affordable for me in 6 months? Are interest rates going to go up, down, sideways? All that stuff is important to you as a home buyer. A couple things I want to point to validify. Logan, how do you say this guy's last name? Modashami from Housing Wire. He's their lead analyst. He puts out absolutely amazing stuff. So kudos to Logan over at Housing Wire for all the great information he's putting out. I've listened to podcasts. I've read articles. He's on CNBC talking about this savagely unhealthy housing market that we're in, right? And it's definitely, a housing recession when all the indicators point down. Sales down, activity down, production down, income related to housing down, right? And existing home sales, the numbers there, from a market that was absolutely on fire, 6.5 million home sales to what projections say will be below 5 million, 4.81 million home sales. The activity is certainly down. But here's where I want to get clear with folks. We can have rates go up, which causes sales to go down, and at the same time have prices go up. And you might think to yourself, like, how in the world can demand come down and prices still go up? Well, it's really a function of inventory. We've been talking about that for a long time. If you look at numbers from 2014 to present, where inventory continues to go down, and you think about the fact that we've got a demographic of millennials, the biggest first-time home buyer group, and first-time home buyers historically make up like 35 to 40% of home buying. If that's a huge group, if you fueled that demand with low interest rates through 2020 and 2021, there's no surprise that we've got very little inventory. At the same time, less and less was being built, right? And so now we're in this weird place where we don't have enough inventory. There's less sales going on and less demand, but at the same time, there's less inventory. So we can have this weird, unhealthy housing market where prices are still ticking up. Will they go up 40% like they have the last couple of years? Of course not. But can they go up 11% like they'll do in 2022? Could they go up 4 or 5% in 2023 while we're in this weird place with low demand, low inventory, and higher mortgage rates? It certainly can, right? So if you're in the market to buy, the closest comparison to what's going on with housing, in my humble opinion, is what happened towards the end of 2018. Interest rates went up to 5%. People panicked, things slowed down. I have a video, I'm going to link it down below, where I talked about 2019 and what people should do. They shouldn't freak out. I pointed to the same things I'm going to point to today. Tons of recession talk, right? And you can look at the last 6 recessions in 1980, 1981, 91, 2001, 2008, and 2020 is an added one since I made that video, where house prices actually went up in all but two of those. 2008, obviously, it was a really big economic recession caused by all the problems in housing, right? In 1991, negative 1.9, you might as well call that flat. But in 80, 81, 2001, and 2020, 6%, 3.5%, 6%, 6%, housing prices actually went up. A quick distinction to make too is that housing recession doesn't mean we're in an economic recession. Jobs are still being built. Are we going to end up in a recession? Back-to-back quarters of negative GDP. I know all the talk, right? Like by some definition, we maybe are in economic recession, but there's still enough positivity where it's not as clear that we're in a recession economically as it is like for sure a housing recession. I love the term by Logan, savagely unhealthy. It really describes what's going on in the housing market really well. And truth be told, there's no solve. There's no clear, resolution for this other than to pay attention to what's going on. If you're a buyer, look at what happened in 2018. Look at how the market reacted in 2019. Mortgage rates went up. The home prices went from, the existing home sales went from 5.7 million or so to below 5 million back then. So there was less action going on. That's already happening. And we're seeing an even bigger pullback, right? So in my opinion, if you want to look back at history and figure out what's going on, look at late 2018, early 2019, an exaggerated version of what happened then. Less homes are selling, and if we enter into an economic recession, what happens with that is mortgage rates come down. I think we've already discussed and enough smart minds have talked about what the Fed can do after this current ramp up that's pulling down demand and taming inflation in 2023 when they pull back and interest rates come back down. If we go into what many consider an economic recession, it always, and I just say always because we're 6 for 6 on the last 6 recessions, means mortgage rates will come down, right? And it's going to be a function, in my opinion, of the Fed pulling back that Fed funds rate after they've raised it to 3.5%, 3.75%, 4%, wherever they get it to over the next 6 months, over the next 5, 6 Fed meetings. Mortgage rates came down in the 80s, 4 and 5% after a recession. In the 90s, came down over 2%. In 2008, interest rates came down by 1%. And in 2020, we go into a recession. We all know that big pullback in interest rates where interest rates came down 1%. So I think, no doubt people have PTSD from 2008. I would say if there's any takeaway, we're nowhere near 2008. The housing market is in a much more healthy place. There's not, all the crazy lending guidelines that are causing all those problems. You don't need to fear the word recession if you're getting into housing. Recession, housing prices generally go up. Recession, mortgage rates generally come down. So if anything else, we've got brighter skies ahead. We've got mortgage rates coming down in 2023. There's no quick cure for the savagely unhealthy housing market, unfortunately. So let me know down in the comments what you think. Happy to hear everyone's points of view. I like it when there's healthy discussion in the comments. So comment away. Again, if you want to connect with a great agent in your area, homeandmoney.com/Matt. If you want to connect with me and my team, greatmortgagebroker.com. Thanks for watching. And until next time, we gonna see.